Welcome to Robert Hunt Financial, where your host is Bobby Hunt.
That's right. We've got Bobby Hunt in studio. It is the Robert Hunt Financial Market Update, where we look at the week's financial news that can be a bit
confusing,
misleading, and take you off course, and we help to make it
actionable, understandable, and clear.
That is the intro. It's always great to have my co-host Bobby Hunt in studio. We've got a great week of news, and therefore we got a great show. 3 articles. We're going to spend some time in Robert's Corner, which we can call Robert and Bobby's Corner, where we talk about what's going on in our minds. But we're going to kick this thing off with these 3 articles. One, Wall Street Journal article, investors are striking gold all over. That's right. The Wall Street Journal is coming out saying everything is going up. It's the best of times. We're going to talk about what that can do to our mindset. Second article, we're going to look at the beloved Vanguard Group, who named a new CEO from BlackRock. So someone outside of the Bogle fold is coming in. What do we need to be thinking about as we partner with these intermediaries in stewarding capital? And then we enter Robert's Corner. It's a wonderful day in the neighborhood. A wonderful day in the neighborhood. Won't you be mine? Won't you be mine?
Won't you be my neighbor?
Won't you be my neighbor here in Robert's Corner? So we're going to talk about Nvidia. This is a tech company that's just been red hot. Doubtless you've heard it in the news or just from a friend at the water cooler that this company, it really reminds me of the late 90s, just how much of a rocket ship this thing is. So we're going to talk about what that can do to our mindset. What are some healthy ways to think about a stock like this that you didn't pick and you wish you had? So back at the top, we're going to be talking about investors are striking gold all over. Now, Bob, what do you think striking gold means? What do you think that actually means?
It's like investors are losing their track and they're kind of getting off course.
Well, that's always possible. I think Bobby, no surprise, is playing 3D chess with us. This is what can occur in these jubilant times. So what this article talks about is that in various asset classes, this is an article by Gregory Zuckerman and Gunjan Banerjee, they are saying investors have rarely had it this good. They're saying prices of everything from homes to stocks to cryptocurrencies are soaring. Now, something that I always think about when something like this comes out, do I feel that? You know, these bull markets, I guess they sneak up on us because it sure seems like there's a lot of negative news. Bob, how are you feeling? Are you feeling optimistic or pessimistic about investing right now?
Pessimistic.
Yeah, I think that's normal. And what makes you feel pessimistic?
People are striking gold.
Well, there you go. So, yeah, so oftentimes it's the paradox that you see people striking gold and you're not, and therefore you're pessimistic. I think it's the news cycle as well, Bob, which you've insulated yourself from. But for many folks, we can look at conflicts in the Middle East. We can look at conflicts in Eastern Europe. We can look at our country's national debt, which, Bobby, you will probably be shouldering, and your children will have to pay back this huge debt, unless you're a modern monetary theorist, and of course you won't. But all that negative news can make us forget that, wait a second, this article explains it. This has been one of the best times. Check out the last 6 months. These various asset classes. Copper is up 31%. Tech stocks up 20%. Gold up 20%. The Russell 2000 up 18%. Smaller companies. S&P 500 is up 17.5% in the last 6 months. Utility stocks, these are the old stodgy, they're up 16.4%. Dow Jones Industrial Average up 14.1%. Crude oil up 8.7%, and then on and on. High yield bonds are up 3%. Investment grade bonds are up 3%, and the treasuries are up 1%. The thing goes on to interview someone, a 35-year-old makeup artist in Brooklyn, who says she's adding to her holdings because she thinks stores are jam-packed when she walks into Bergdorf Goodman and Sephora. So she's saying they're still buying. Now, as an investor, we got to think about this because I've been told, I don't know, I'm going to say the last 2 or 3 years, and you guys love when I say this, can't trust this market. Don't trust it. Too much. Wait for the pullback. And I'm certainly, I've heard the predictions the last 2 or 3 years. Hey, this thing's getting cut in half. It's getting cut in half. This is a fake market, frothy market. But what this article is just telling us, it's being candid, saying, what the data says is that there's actually a lot to be optimistic about. Check out this quote by Gary Cohn, the vice chairman of IBM and the former director of National Economic Council. "We have fundamentally changed the economy." That's right. Gary Cohn, vice chairman of IBM and the former director of National Economic Council. "We have fundamentally changed the economy. Companies are investing more in the U.S. than they have in a long period." So check out this quote. This is by Steve Eisman, a senior portfolio manager at Neuberger Berman on CNBC. He says this: "Everybody is coming to the year feeling too good." So he's a little worried about that. Eisman says the stock market is in a better position than in the 90s. You guys may remember the 1990s, a time when unemployment was low and the excitement about the internet drove a tech frenzy. "I'm feeling pretty blissful," he says. Now, as an investor, here's why we like to keep those costs low, investing simple, and time horizon
long.
Thank you, Bob. It's because we have no idea when this stuff's going to strike. Right now, I read this article in the Wall Street Journal this week, and I think, gosh, I'm not sure I even felt that myself. I go back and read this return data across all these asset classes, and I think, oh, wow, I guess so. I guess these are the best of times, even though I certainly don't feel that way. But it is, the data's showing it, that we certainly are doing so well. So the time horizon long portion is so critical, because if you seek to move in and out, like let's say you've got cash on the sidelines, a bunch of people do. You read this article, what do you think you're thinking? What do you think, Bob? If you've got cash on the sidelines, you read that everything's optimistic, how are you feeling?
You're feeling kind of nervous because you don't know what one to choose. Should you take the wrong path or the right path? And the wrong path's trying to get you to move to their spot.
That is bingo, bongo, bango, exactly correct, Bob. You don't know what to do. You were paralyzed, as Bobby said. You don't know whether to pick the right path or the wrong path. You're in cash. You've been not trusting this market. You have not been keeping your time horizon long. You've not been keeping your investing simple. You've been doing something called market timing. And so now you read an article like this and you think, well, did I miss it? Did the train leave the station? Do I catch it? Well, I can't invest now. I got to wait for the pullback. Well, guys, what if this is 1995 or 1996? And the pullback's coming, but it's coming in 2001. So you're going to wait 5 years while the market returns 20%, 20%. I have no idea, by the way. The market could be cut in half tomorrow. But it is a great reminder that without a long time horizon, we're going to be, as Bobby Hunt said, caught on a path. Caught on a path, like Robert Frost talked about. He's stuck. There's a fork in the road. What do we do? And I couldn't tell you what to do. Now, I could step out from the news cycle and say, yeah, just invest. Let's not overcomplicate this. But I would have told you that last year, and the year before, and the year before, and the year before. So here you are, all systems go, according to Mr. Gregory Zuckerman and Gunjaj Banerjee. Do you do it, or do you hang out? Check out this data. The S&P 500 is now up nearly 50% from the bear market low in October 2022. So naturally, almost everybody is bullish. This is Ed Yardeni. I like some of his research, said this. He's an economist who's been more optimistic than others in the past, according to this article. So here we go. Some people say it's a mirage. Uh-oh. The troubles will become clear later this year. We've got record housing prices, high mortgage rates. It's hard for people to afford homes. So there's always a reason not to invest. Always. There's always fear. There's always a reason why this thing could just blow up in your face. You don't want to be seen as a fool. But that's why these rules are so critical for us. You're keeping your costs low, you're investing simple, in your time horizon
long.
So that is what is going to buttress us, because we've met the enemy. We look in the mirror, and the enemy is us. It's you and I, and yours truly in particular. No pastor is in greater need of his sermon than I am. We've met the enemy, and it's us. We can just overthink it. I overthink it like crazy. Like crazy I do. What do I tell myself? Same thing I tell you. Don't do that. Don't overthink it. And then another Wall Street Journal article. Our beloved Vanguard group just named a new CEO from the BlackRock group. So BlackRock, for-profit, one of the largest asset managers in the world, and his name is Salim Ramji. He led BlackRock's ETF business, exchange trade fund business, And this is the first time that a non-Vanguardian, meaning someone who did not grow up and was educated in the school of Vanguard under Jack Bogle, an outsider, is coming in to lead the company. So a whole host of folks are wondering, oh dear, what do we do? My initial reaction to this article, which goes into details about Mr. Ramji's background, which is actually in the index funds, which we love, is that it's actually pretty good. But let the buyer beware. We actually don't know what changes he will make, if any. Vanguard has already been in process of making some changes. We can step back a little bit here and say Vanguard historically has been the safest place for investors to move money. Safe, defined as you're not going to get hosed with some crazy product or bad advice. Do I think that's changing? Ever so slightly. I still think it's the best if you don't need a brick and mortar setup and you just want to, park money basically on the internet. I think it's great. What's happening and what could this BlackRock CEO hiring portend? A little more looking like the surrounding nations. Like a little more looking like everybody else around it. Like the Israelites, they go into land of Canaan. Don't intermarry. Don't be like them. Be willing to be independent. And Bob, why is it so important that we can remain independent and unaffected by those surrounding nations? Why is it so important that we stick to our principles of those three principles? Why does that matter?
You want to stick there because, of course, you don't want to get off the track again. And if you get off the track, then you could be going the wrong way, and it's hard to turn back.
I couldn't have said that better on hard to turn back. Once a philosophy of investment has to be ingrained in a company, and it is possible that over time Vanguard becomes less and less like the former company. Recognize it. That's not the end of the world. Your job, my job, is to navigate through these large institutions. I recommend hiring an hourly financial advisor. Who's your favorite financial advisor, Bob?
My dad.
I appreciate that. That was not. You could have chosen anybody right there. Big list to choose from. Chose me, but find someone that can help you navigate this stuff, because, believe it or else, even the Vanguards of the group and the Schwabs and the Fidelities, all these places that I think are excellent vehicles to store money in, the advice side, not so good. Not so good. Vanguard's, I think, is the best. Actually, people ask me, I actually think Vanguard's advice platform, I've sent people there who I'm not a good fit for. Sadly, I'm not a good fit for everybody. I will send them to Vanguard, and they'll charge you 0.25 or 0.35, something like that, percent to manage your money, and they do a pretty good job. Believe it or else, they actually get worse the more money you have, paradoxically. So if you come in with a bunch of money, their advice, they start doing goofy stuff. So let's keep our eye on it. Let's keep trusting Vanguard, but let's trust but verify. Let's always be looking to make sure they are honoring the legacy that the great Jack Bogle left. And then let's step into Robert's Corner. It's a wonderful day in the corner, Bob. Why is it a wonderful day in the corner?
It's a sunny day and a nice time to be making a podcast.
That's exactly right. It's always a good time to be making a podcast. Bobby you were playing baseball outside today. Uh-huh. Did you win?
Yes. I beat Mama 6-1.
Okay, we've got a 6-1 victory over his mother in baseball. Well done. So we're here in the corner. I just this is more confession. When we step into Robert's Corner, we realize this is a little confessional. This is not prescriptive. Nvidia is a microchip processor design company that's the best in the world. They design these GPUs, graphics processing units, and they are the best. So all these AI companies are buying them. This stock is on fire. And oh, by the way, it kind of has been for a while. It's taken its dips, but I have a tendency to go back, and today the stock's up 10%. This is a $2.5 trillion company that's up 10% a day. I'll let you do the math. $250 billion increase in market cap. The entire stock market of Germany is less than Nvidia. That is a major developed nation. We have one chip company that's bigger. What I have a tendency to do is go back and look at my chart, and I say, you know how Nvidia's performed the last 10 years? It's up 22,500%. You know how it's performed the last 5 years? It's up about 2,800%. Last 2 years is up 519%. Last 1 year is up 241%. And I started to think in my head, should I just be a stock picker? Because the answer has always just been buy Nvidia. In fact, in any time frame I've looked back, I should buy it. Go back to inception. Nvidia's up 200 about. This is from February 1st, 1999. Nvidia's up about 229,000%. That means if you put $1 million in, you got about 2.2 billion now. So it is tempting, even for the index enthusiast, even for the efficient market theorist like myself, to look at the charts and to think, oh dear. So there's articles that have been coming out like crazy. Wall Street Journal article, 23rd of May. NASDAQ opens higher after Nvidia earnings fuel AI optimism. And if you are an investor, you are going to be barraged with this information saying, oh, did you invest in Nvidia? Did you buy that stock? I've got a friend who did, and I'm always asking him, hey, did you hold on? Yeah, I did. I'm always thinking, man, I should have done that. But who knew? So we go back to first principles. We go back to, well, is that repeatable? Could we have known Nvidia was going to do this? No. Now, maybe some did. That's not me. But what did we do? Well, believe it or else, if you bought an index fund, if you bought even the global index fund, you got to buy Nvidia way back when. So you owned a small sliver of Nvidia in 1999 when it was publicly traded. So you've ridden the entire road up. And oh, by the way, this is something that is maybe tough to hear. Very few of us would have held on to the stock if we owned it individually over that time period. There's almost no way. The temptation to sell could have occurred in any time period. There are time periods, for example, February of 1999 to July of 2014, the stock's up 940%. You might have thought there, hey, I'll take some chips off the table. I'll sell. Well, had you not, you'd be up, 45,000%. So it is so hard to stick with individual securities over long periods of time. All the more reason why the almighty index fund is a great help to the investor, because it forces us to not get in the game where, take the little chips off the table. The stock's overvalued, undervalued. I probably would have told you Nvidia was overvalued about 100 different times in the last 25 years. And even now, you know what I'd do now? If I had, let's say you had made me buy it in 1999 and I couldn't sell it till now, would I sell it today? Yeah, I would. I would think right now, well, I'm up 230,000%. I'll just sell it. But in any of those time periods, I would have been a seller and I would have missed it. The index fund forces me to not be a seller. I'm forced to own everything all the time, stick with it through thick and thin. And it is important that we force ourselves to stick with something. And why is that important, Bobby, that we have to stick with something for a long time?
Because you don't want to get off track, of course. You want to jump off and get off, like, left and right and center. You don't want to just jump off anyway on both the tracks, because, again, they try to make you get off. And if you get off, then you need to try to turn around, but they're going to try to hold you there, but it's going to be hard to get back.
I agreed. It's this idea that Bobby just articulated so well. Now you have a gajillion choices. Once you're off the track, once you're off the straight and narrow, oh dear, now you've really got to call different shots. So, as always, let's keep those
costs low, your investing simple, and your time horizon long.
Until next time.